Welcome, and thank you for coming to watch the video. Did you know a traditional warehouse company just dropped $1.3 billion on data centers in a single quarter?
It's pretty mind-blowing.
Right. Today, we are exploring the Prologis Q1 2026 earnings call, doing a deep dive into the source material to uncover how logistics real estate is secretly funding the AI boom.
Yeah, it's honestly a staggering pivot. But, to understand it, you really have to look at their core business first, which is just an absolute juggernaut right now. I mean,
Okay.
they hit a record 64 million square feet of leasing in just Q1,
Oh, wow. That's what, like 1,000 football fields?
roughly.
Yeah. Yeah.
And they're sitting at a 95.3% occupancy rate, which is wild. So they actually raised their full-year guidance for core FFO,
Mm.
the cash flow from operations. It's up to between $6.12 and $6.28.
Mm.
Plus, they started $2.1 billion in new developments.
Right, using something like 2.6 billion in third-party equity for that, right?
Yeah, exactly. But the main thing here, despite all the geopolitical uncertainty we're seeing, is that their customer demand and 2026 plans are rock solid. They're basically selling pickaxes during the AI gold rush by using their land for data centers.
That is such a perfect analogy. Before we jump into the rapid-fire Q&A section, if you are finding this valuable, please click like, share the video, subscribe, and stay tuned for more upcoming content. So let's get right into what the analysts are actually asking.
Yeah, let's do it. So first up was Ronald Cumdem from Morgan Stanley, and he was asking about leasing spreads. Prologis said they are basically balancing rent pushes with occupancy on a market-by-market basis.
Got it. And then Michael Griffin at Evercore ISI brought up data center risks, which is, what everyone's thinking about.
Oh, absolutely. But Prologis pointed to their massive 1.3 gigawatt pipeline, which just proves the immense customer demand is there. Nick Joseph from Citi also jumped in on development margins. And it turns out data center margins are highly profitable, hitting that 25 to 50% range.
Wait, 50%? That's incredible.
Yeah, it really is. And Blaine Heck at Wells Fargo asked about occupancy guidance. They actually raised it because of surprise renewals and just a really strong pipeline.
Huh. So what about the fundamental outlook? I think Andrew Berger at Bank of America asked about that.
He did, and they said it's completely unchanged. The market is basically passing an inflection point right now. Though, Nick Yulico from Scotiabank did ask about laggard markets. LA and Seattle remain soft, but Germany and the Netherlands are leading Europe.
Okay, so if the West Coast is soft, Vikram Malhotra at Mizuho asked where the rent growth is actually happening, right?
Yeah, and Atlanta, Dallas, and Houston are leading the charge there. Thomas Catherwood at BPI then asked about supply chain bottlenecks, like, getting equipment.
Right, because transformers and stuff are so hard to get right now.
Exactly. But their fortress balance sheet allows them to do crucial pre-ordering, so they're fine. Caitlin Burrows from Goldman Sachs asked about their strategic capital focus, and they're just preparing for massive deployment volumes.
And Michael Goldsmith from UBS asked about lease proposals. Like, are customers actually signing?
Yeah, they're finally acting on deferred needs. Then Vince T-Bone at Green Street asked about data center logistics, which Prologis says is a new structural driver capturing 10% of new leasing.
Wow, 10% already. Michael Carroll at RBC Capital wanted to know if they were doing power-based or turnkey builds, right?
Right, and they are focused purely on powered shells right now. Nick Thillman at Baird asked about cap rates, which are holding steady at 5 to 5.5%, with a real focus on total return.
Got it. And Michael Mueller at JP Morgan brought up joint venture allocations.
Yeah, those are just managed by their long-standing governance policies. Brendan Lynch from Barclays asked about concessions, which are a bit elevated in the West, but they're expected to normalize.
Okay, almost done. John P. Kim at BMO Capital asked about data center vehicles for their 5.6 gigawatt capacity, I believe.
Correct. And they're actively evaluating options for that. Finally, Todd Thomas at KeyBank asked about Southern California rents, which are bottoming out, but it's just too early for broad increases.
Well, that was a massive amount of ground to cover.
It really is. But, if you pull back, the main theme here is that Prologis is utilizing its massive land bank to build the physical backbone for tech. They're creating an entirely new growth engine out of thin air.
They really are. Well, thank you so much for watching our deep dive into the source material today. Remember to click like, share the video, subscribe, and stay tuned for upcoming content.
Definitely. And I'll leave you with this. If logistics companies are becoming the biggest power players in technology infrastructure, what other boring traditional industries are secretly controlling our digital future?